Hi there, and welcome to the award-winning Ed Brown Show. I'm your host, Kamaria Richmond, and we have a wonderful show for you today. We are talking to Mr. Aaron Simmons, and he's a mortgage lender, and we're going to get right into it. So, Aaron, welcome to the award-winning Ed Brown Show.
Thank you, Kamari, for the opportunity. It's so funny that we had a chance to meet about 2 weeks ago and had a great conversation at the 13th Man Banquet, and now I'm here, and I'm just thankful for the opportunity.
Thank you for coming because you have come a long way, so we're going to really pick your brain.
Okay, absolutely. I think I'm ready for it.
Now tell us the name of your company and why you chose that company.
Okay, I'm with First Heritage Mortgage. I've been with the company for 3 years. I've been in the mortgage industry overall. I have to remember what year it is, but I started off in 2005, so that make it about 14 years.
Wow.
The reason why I chose the company is they have a great I can't even really explain it, but they just have an awesome repertoire, not only products, but the leadership under Alex Wish and Jerry Berry out in Fairfax, Virginia is outstanding. I've been with a lot of companies, but they have the correct amount of support, training, and just overall products that can really help me take my business to the next level.
And why did you get into this business?
By accident. You want the watered down story or the real story?
The real story.
Okay, so I was working as a telemarketer in Leesburg, Virginia. I was looking for a job. I happened to become a telemarketer, and we were doing mortgage leads at the time. So we were doing like hot transfers. So I know a lot of people out there really hate telemarketers, but if you think back in the early 2000s, telemarketing was a big thing. So we were able to call anybody and call anybody. So I was pounding the phones. I was an excellent performer doing that because I was told I had a good personality. And then one day I was walking a mortgage lead over to a gentleman that was a senior loan officer. I walked the lead over to his desk, and I looked down, and he had his commission sheet laying on the desk. And I said, "Oh, is that how much money you're going to make this year?" He said, "That's how much money I'm going to make this month." And I said, "Teach me to do what you do." And the rest is history. So I wish I could say that it was for some other reason other than economic, but it grew to be something more than economic because I really think that mortgages and real estate are a great way for people in this part of the world to create wealth for themselves and their families as well.
Right, and you're part of that. You are part of that growth and really helping someone reach that dream, because we know, for this country, most people want to own their own home.
Absolutely, and real estate is really one of the primary sources of wealth in this country, and really for the average person that's just working a job or has a home-based business or has some form of small business, which is the majority of Americans. I think that people forget that most people are not P. Diddy or Oprah or movie stars, but most people either own businesses or work wonderful jobs and really are the support and backbone of this country. And what do they want? They want a quality place for themselves to raise and live, and to kind of just help their children get a wonderful education. And that all starts with real estate, where people live and what they do.
And I think you are absolutely right. So let me ask you, what do we need to look for in a mortgage rate? So tell us, give us like the ins and outs, because a lot of times you go to buy a home and you don't know what you're looking for, you don't know what you're saying. You can do all the research you want, but unless you have someone like you that's committed to helping someone, fulfill that dream, it's like, where do you start? So where do I start in looking for a mortgage?
Well, I think that the first step, and I know this might seem very elementary because I had to actually teach my son last year. We started talking about flipping houses and financing and real estate. What is a mortgage? You'd be surprised of how many people don't actually know what a mortgage is, and I really try to break it down in very much layman's terms. Let's say you're going out there and you're looking, and you and your family want to purchase a property, and you find the most wonderful home, and it's in a great neighborhood. As you and I were discussing a little bit earlier, the difference in prices from the 1950s to now. So you see that price tag for $500,000, which is becoming more of an average price in this Maryland, D.C. area. Well, if you don't have a check to write to purchase that property, what do you have to do? You actually have to borrow money from a bank in order to purchase that property. And that's what a mortgage is. It's simply an instrument that allows individuals to take out a deed of trust and a note, which is a promise to pay, which is to pay the bank the money back in order for you to purchase that property for anywhere between a 10, 15, 20, or 30-year period of time.
And what's the best mortgage?
It depends on your circumstance and your situation. Everything is pretty much situational in the mortgage business and for real estate as well. So for example, if you're looking to purchase a property and you know that you're looking to retire in 10 years, you might say, hey, Aaron, you know what, let's look at a 10-year mortgage because I'm thinking about paying this house off pretty quickly. Or if you're very sensitive about mortgage payment, you say, you know what, we can't really afford what the payment's going to be on a 10-year mortgage, but that 30-year interest rate looks a whole lot better. Guess what? We'll amortize the mortgage over a 30-year period of time, and so that's how we're able to lower that monthly payment. So everything is situational, and there's no same thing for every particular client.
Okay, and I wanted to ask you too about discounts. So can you get a mortgage rate discount? How does that work?
Oh, so you're probably talking about, which is a common term in the mortgage business called discount points.
Right.
What a discount point is that a borrower actually has the opportunity for a cost, everything has a cost to it, that you can actually buy your rate down to a discounted amount. So for example, if your average mortgage rate is a 3.875, when you're talking to whoever your local lender is that you decide to use, or a national lender, they might tell you, hey, this is the par rate, which means that it doesn't cost you any money. However, if you want to get to maybe 3.375, you might have to pay something that's called a discount point, which is exactly what it is. You pay a discount to get a lower interest rate.
Okay, so when you go to closing, and because I'm trying to remember, like, you know, when I bought my house.
You sound pretty savvy. Yeah.
It's been a while.
It's been a while, okay.
But when you get to like that day, isn't there something that you can do with your mortgage rate that day?
If your loan is not locked in, possibility. So for an example, if you're talking to a mortgage advisor or a senior loan officer, at the beginning of the application, they should really be advising you if you should lock your interest rate in or not. The reason being is because an experienced mortgage loan officer or an experienced mortgage advisor, is going to tell you exactly, well, you know what? I've been watching the market. You know what? I think rates are going to get a little bit lower. Maybe it's not a good time for us to lock in right now. Let's watch the market for a couple of days. We were at 4%, but I really think that if we can watch the market and see exactly what stocks and everything is doing and just the overall economy, we might be able to get you a better 0.25%. That's what a mortgage advisor is supposed to do in locking in the rate. Now, what you were speaking of specifically was floating the rate, which means that I call it, in certain cases, Russian roulette. You're floating all the way until you find that perfect point to lock in that interest rate. Now, I would advise floating all the way until the day of closing may or may not be a great idea, because if so, that means you have the best loan officer in the world, because he's predicted interest rates for a 30-day period of time. So that would be wonderful. Ideally, typically during the process, your loan officer, for the clients out there that are even maybe looking to refinance their home or to purchase a property, you should be talking to a mortgage advisor that's going to tell you, hey, is it a good time to lock in, or is it a good time to float that rate? If somebody's just telling you to float or lock in immediately, you might not be talking to a mortgage advisor. You might just be talking to someone that's treating it like a transaction.
And that is the thing. You want the person that you are working with to be like,
absolutely.
You know, you need to be 100% comfortable, and someone that's going to really tell you the real deal. Because after you spend months of working with someone, trying to find the home and, you know, getting to that point, it's like, I ought to know you and you ought to know me.
It's a relationship. With anything, it's a relationship. You have to, clients forget, and sometimes sometimes first-time home buyers, they really come into the office and they're a little nervous about the process, because they're like, man, you're asking for W-2s, tax returns, pay stubs, my three children, my dog, my cat. But I say, hey, you're looking to borrow $400,000, not $400. The question then becomes, if you were going to lend me $400,000, would you ask me any questions?
Oh, yes, of course.
So what is a bank going to do? You know, and the reason why I'm mentioning that is because what that does is it gives you proper expectations going into the process. So if the lender asks for more documentation, we need another bank statement, we need this, or we need anything, because things pop up during the mortgage process that you're going to need to have available to you. If you have the expectation to say, hey, we're borrowing a lot of money, this is an extremely important transaction for myself and my family, you'll you'll be prepared to provide those documents at the drop of a hat, and it makes your mortgage process go a lot cleaner.
And so what exact documents do we need?
Oh, well, typically a lender, in order to give you what's called a full approval, which is I'm going to look at your tax returns, your W-2s, your pay stubs. If you're required to pay any child support documents, we're going to need that. We're going to need your bank statements as well, a copy of your photo ID, and we're obviously going to pull a credit report prior to doing some of that information. Once we put together all those documents, we can actually have a very accurate assessment of exactly where you are financially, and specifically tell you, and even have an underwriter look at this and say, hey, this person can be, or this family, excuse me, can be approved to borrow this much money for a mortgage, if that makes sense.
It does. And let's say you want a home for you or your family.
Yeah.
And let's say you don't have the best credit.
Yeah.
So how do those people, get homes?
Great question. A lot of times, a lot of the business that I'm actually able to obtain is because sometimes people call lenders, and every lender, and I like to say it, somebody walks in the door with 800 credit score and 20% down, you can do that loan with your eyes closed. I might even be able to teach you how to do that loan. However, advising a client that's had a bankruptcy, that's been through divorce, that's had some medical bills on, how to clean up their credit,
Right.
develop a budget, have a plan, have a lender that's going to call you back and attempt to stick to the plan. Those are all things that every mortgage advisor or lender is not willing to do. I myself, I kind of pride myself. I built a business on helping clients clean up their credit, and it's been pretty successful over the last 14 years.
And see, it's more important now in the world that we live in this digital age or this global economy where things are popping up for folks all the time.
Yeah. We are. I always tell clients there's something that's called debtclock.usa. And if you just Google that, it tells you how much consumer debt is being taken on by the average consumer. And it's like trillions of dollars like every single year.
Wow.
So we're putting that in a perspective of that's the entire United States. The average individual family, they say, has anywhere between $30,000 to $40,000 of consumer and installment debt. And guess what? Loss of a job, a new
Yes.
baby, what this thing that we call life happens to people. All of a sudden your credit went from having a 700 down to maybe a 500, and you need a little massage. You need somebody that's going to say, hey, you know what, everything can be repaired. It's just going to take us a little bit of time, but these are the correct and proper steps we need to move forward.
And I remember when I was buying my home, someone was buying the house right next to me. And so, of course, she had been approved. Everything was going well.
Right.
And the day of closing, she bought 2 vehicles. And so she did not get the house. So talk to us about what happens like on the day of closing, because on the day of closing, you're still checking credit and all of this.
Absolutely. I'm glad you brought that up, because specifically, actually, at the beginning of the loan process, my team and I, we send the clients a list of things not to do. And on the top of that list is don't buy a car, don't buy a car. Oh yeah, guess what? Don't buy a car.
Right.
Because remember, the bank is looking at, it's a snapshot of whatever your application was at the day that you applied. But during the process, they are going to periodically see. We actually have something that can actually show us during your loan application if you've applied for any sort of credit. Have you gone to a furniture store? If you're inquiring, because guess what? You taking on, like your client, like your neighbor figured out, you taking on another $300 or $400 car note can drastically impact whether or not you can afford this mortgage. Now, obviously, what we want to try to do is tell clients, hey, the vehicle depreciates, the home appreciates. You can buy the car anytime after you close, but during the mortgage process, do you remember that game that kids used to play back in the day called freeze tag?
Yes.
Yes, so freeze tag, remember you'd be running around as a kid and then somebody frees you and you're frozen? That's what we're doing in the mortgage process. When you begin the mortgage process, you are frozen until you get the keys in your hand. Your note and your deed are recorded in whatever courthouse or whatever attorney that you're working with. So I'm glad you brought that up, because any sort of transaction can raise a red flag and affect your loan approval process.
Right. So it's like, so where did this extra money come from?
Hey, absolutely, absolutely.
Which is, it's amazing. And it takes a lot to become a homeowner.
It does.
And,
It does.
and to maintain that home. So what kind of assistance can folks get? You're in the house, or you're in your house, but you go through like a month or 6 months and you're thinking, okay, I could float it in the beginning, but now life has happened. So what kind of programs can people look for
Okay.
to have that kind of assistance?
Oh, you mean when they're actually closed and they're in the house and they're looking for some sort of assistance, maybe if they're having problems making a mortgage payment? Is that what I just want to make sure I'm being clear? So the good thing is that at the beginning of every single mortgage process, we actually give our clients a list of HUD-approved agencies that are actually able, which HUD, and just for people that are out there, that's Housing and Urban Development. And what they will actually do is they have a list of agencies that will provide assistance for clients that have lost a job, having trouble making a mortgage payment. The wonderful thing about that list is that they're all local. So these are places that someone in Bowie or in Fort Washington or in Maryland or Virginia, you can drive down to the agency or give them a call and say, hey, guess what? I need to talk to a housing counselor. My family's struggling right now and we really need some help. And they will actually call your lender on your behalf and try to work on some sort of payment option. The number one thing with debt is call the lender before they call you. I know that sounds very, very simple, but if the lender's calling you, it's like the IRS. Don't ignore them. They just want to know. They want your money. We want to make money on interest. That's capitalism. But don't let payments get behind. Call your lender. Let them know that you're in trouble, and there's always ways to work around things and help families and individuals out.
Yeah, because what happens, let's say, you want to do it on your own, or, you think that you're going to have this big paycheck come from someplace, this
Absolutely.
money, you're just going to have money maybe next month or within the next 3 months. How does it get to the point where people actually start losing their homes?
Yeah, that's called the foreclosure process, and obviously in banking, that's the bad word. We never want anyone to lose their home. The foreclosure process for some banks, I've seen it happen to where after 2 consecutive missed payments, they will actually start the foreclosure process. Now, they are legally allowed to give you a certain period of time to get the mortgage caught up and to actually start the foreclosure process, but it all just depends on the bank, but it goes back to exactly the number one thing I said. A lot of times people know that they're going to be in trouble before it even happens. Call your lender.
Right.
Everything can be avoided. Now, obviously, a loss of a job, I've had clients that have had layoffs and they've lost their home and they've come back 2 or 3 years later to repurchase a property. So there are certain life things that do happen, but if you're just in the midst of a small, what we would like to call a storm, call your lender. Maybe they have some deferment plans available. Maybe they could push in a mortgage payment out. There's always options available because lenders need paying customers, and that's one thing that I think the public doesn't realize.
Right, because you get nervous and you become afraid because
Absolutely.
It's like, how am I going to do this? So if someone comes to you like 2 or 3 years later, I mean, how are they able to come back and purchase another home?
Well, different programs have different options. So, for example, FHA, which is the Federal Housing Administration, they have a 3-year waiting period. If a person has actually been foreclosed on, you have to wait 3 years after that foreclosure period or when that property was sold that you can purchase another property. If individuals have had what's called a Chapter 7 bankruptcy, we call the Chapter 7 the forget about it. I should have used my Italian accent, but forget about it. Right. But that's what it is that you don't have enough income to repay the debts and all the debts are wiped away. FHA also, which is a great loan program for families, they actually have a 2-year waiting period off that. So a person could actually have a bankruptcy, we don't advocate it, but 2 years later, they can be back in the housing market. And those things happen. Let's say you have a business, medical bills, they constantly happen. But families and individuals need to know there are opportunities out there for you to become a homeowner and start to, like what I say, is start building your real estate portfolio.
Now, what is the real estate portfolio?
It's the amount of homes that you own. It's the amount of real estate that you own. And a lot of people, sometimes we think about real estate in really, really big terms. So we see commercial properties and big buildings, but a lot of people in this part of the world have built their real estate portfolios by simply owning what we call single-family residences, by owning rental properties or maybe some multifamily units. Okay. How do you get into the game of becoming possibly an investor or having a real estate portfolio? Well, it always starts with one. You have to start somewhere.
Right.
And typically it always starts with what? Your first property. And so I always say, we're always mortgage advisors. So we're not only advising a client that this is a house that you're gonna just live in, this is something that could be an investment and something you can leave for your family's legacy for generations to come. Don't think about it as just the house you're living in. Think about it as an investment that you're starting your real estate portfolio. It also has a better ring to it too.
It does. I kind of like that.
Absolutely,
I kind of
absolutely,
like that.
absolutely.
My real estate portfolio.
Hey, it's yours.
Right, it is yours. And what do you tell people that want to get into the business?
Either on the lending side or the
Both,
real estate side?
both.
Wow, that's a great question. The funny thing, I love to tell the story. There is a person that I worked with very, very closely. She was a lender and she was asking me lending questions. And she sat down, we had lunch one day, and I said, "You'd be a much better real estate agent than you would a lender." And she said, "Why do you say that?" I said, "Because you love to drive your car. You like talking. You love talking to people, but you just have the personality." Right now, in the county in Virginia that I live in, she's one of the top producers in that particular area.
Wow.
So I would simply advise if people want to get into real estate, the first thing to do is start reading articles. The wonderful thing about Google and Yahoo is that there's an abundance of information that's available. It's really easy. There's wonderful companies out there that can help you with training, programs, and even on the lending side, there's so many organizations that are looking for people that have personality and that have the skills to do basic mathematics, out there marketing and advertising. So it's an industry that's really built for anybody that has a little bit of will to succeed and will take a leap of faith on themselves.
And that's the thing, it's a leap of faith.
Absolutely.
Not only for yourself, but also working with your client.
Yes, yes.
And so the thing about it, how are the tests?
You're talking to a guy that took the test 3 times, so it's wonderful that I can be transparent. Well, let me rewind a little bit. It's so funny, we're having a great dialogue here. So before the real estate market crashed, agents and lenders, particularly lenders, anybody could just get hired to be a lender. There was no national system of licensing or anything of that nature until 2009, 2010, 2011. At that point, every lender had to start getting licensed, and you have to pay licensing fees. So there was a lot more, what I like to call, people started watching the industry a little bit. So the test really isn't that difficult. I remember at the last company I was working with, that was 2010, you only have 3 times to pass to take it and to pass. So the first time, I didn't pass it. The second time, I didn't pass it. So the third time, I'm sitting there saying, whew. But I passed it and I did really, really good. So, that was just me, but everybody's aptitude is totally a little bit different. I'm not a really, really good test taker, but once some people, they love taking tests. That's not me, that's not my thing. I actually love math, I don't like math on a test. But everybody's aptitude is different. And so you just have to have basic math skills and just an ability to really solve problems. And as lenders, that's what we do. We're putting a puzzle together and we're trying to solve problems for families and individuals. So I hope that answered your question.
Yeah, it does.
Okay.
And that's what you're looking for, because you're going to have problems. You're going to have bruises and bumps along the way. And so you really do want someone, sometimes like just to kind of hold your hand.
Yeah, it's handled. Well, the major problem is that you want to buy a house and you don't have the cash. That's the problem. That's the initial problem.
Right.
And that's what we as lenders and mortgage advisors are here to do.
And that's really what you're looking for. And when let's say, okay, you passed your test, now is it good to have your license in, let's say, how many different states?
That's a great question. Right. So right now I'm licensed in the state of Maryland, Virginia, DC, and North Carolina. It depends on what company you work for, because certain organizations, let's say if you work for a federally licensed bank, you will have the licenses that they have. So certain people can work for companies, and if the bank is licensed in all 50 states, you can be licensed in all 50 of those states. I like to have my individual licenses because let's say I don't want to work for a bank because let's say they have certain restrictions on products and programs. I can take my licenses where I want to go, whether it be the company I'm working for now, or if I've decided to become a broker. I have that leverage and I have those individual licenses, and as long as I keep up my testing and all my certificates, I'll be fine.
So when you become a broker, what does that mean?
A broker it's like correspondent lending, and simply what that means is that you're just not associated with the big bank and you're selling your loans on the secondary market. There are a lot of good brokers out there that have great interest rates, great products, and great programs. A lot of the misconceptions, I'm not a mortgage lender basher, a lot of the misconceptions that you're going to end up paying brokers a lot more money, that's not necessarily true, because a lot of those lenders have become a lot more competitive. So it really just, I tell people, it depends on the personality, you as the consumer, and you getting with the lender. It's just like the synergy that we're sitting here having.
Right.
Everything is synergy. Do I like this person? Do I want to work with them? Are they offering me competitive rates? And are they knowledgeable about the process?
Yes. And now when you're saying products, what do you mean exactly?
Well, different banks offer different products. So for example, the company I'm with, First Heritage Mortgage, we offer so many different products that are available to the public that some lenders may not have access to. So for example, in Prince George's County, there's a product called the Maryland Mortgage Program that gives grants to people that are actually looking to live in the state of Maryland, but also opportunity zones in certain parts of Prince George's County and Baltimore and things of that nature. Not every lender has access to that program because there's certain requirements. In Virginia, we have Virginia Housing Development Authority. We're a delegated lender with them as well, which means that there are grants available for 100% financing, lower credit scores, same as the Maryland Mortgage Program. So there's a lot of opportunities available in those areas as well.
And this is the thing. So Mr. Google or Mrs. Google.
Yes, ma'am. Yes, yes.
So you can really, this information is out there, but you really have to kind of comb through it.
Yeah, it's a lot to take on.
Right.
And so it'd be extremely difficult for the average person, unless they had the time and the aptitude to say, I'm going to figure out a way to construct my own mortgage. You want to go through a lender or someone that can help you walk through the process, and they help it be streamlined.
Right, because you don't always know with Mr. and Mrs. Google exactly what you
and
are
inaccurate
getting.
and I agree with that. Inaccurate information can
Right.
totally kill a deal. You're walking into an expectation, and all of a sudden the expectation becomes different, and you're like, I thought I could do this. When you and up front, you want to talk to a mortgage lender and make sure that everyone's on the same page and we have the correct information, which makes the process a lot smoother.
And that's what we think. We think that we can do it. Sometimes we think that we can do it ourselves.
Yeah.
And Aaron, we have a few next seconds left. How can people reach you?
Oh, okay. You can reach me at my website, www.fhmtg.com/Aaron-Simmons. You can find me on Facebook, Aaron Simmons, or you can find me on Instagram, Aaron_ARONNYC. That's the thing with the Key and Peele joke. Everybody says Aaron, and ever since that started, that's everywhere I go. People say Aaron, but yeah, that's how they can reach me. And actually, if you Google Aaron Simmons, mortgage loan officer, there's a 95% chance that my big cheesing face is going to pop up.
That you're going to get it.
Yep.
Well, Aaron, thank you so much for being on the award-winning Ed Brown Show.
Oh my God, this is amazing.
A treat. And everyone, thanks for tuning in. And actually, we're going to do a second segment to answer some more questions that I have to ask. So thank you, and we'll see you next time.